welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks with in-depth analysis, deep dive into the financials and tell you about the key risks and triggers going forward. Let's not waste any time and get to our first stock today. My colleague Nigel gets us this very special deep dive on VIP industries.
Well, VIP Industries is the #1 player in the organized luggage market, and many of us would have used their brands at some stage. Well, their brands are spread across genres, and they're up for you on the screen. But the stock market participants, they are wondering if the worst is over for the company, and will things look up from here on? Because things have been a little bit rocky of late. Well, the gross margins have recovered, buoyed by deflationary raw material trends, in-house cost optimization program, and higher average selling prices. But this improvement has not flown down to the EBITDA margins. That's because of increased freight and accelerated spends on e-commerce, which entails higher professional fees and marketplace activations. Well, they were slow to start in the e-commerce market, but now they're making their presence felt. With a growth of more than 50%, that's coming at the cost of margins. Their report card, well, it hasn't been that great so far, which has resulted in Safari grabbing the imagination of shareholders with a big outperformance in the stock price. And also in the past few quarters, Safari's margins and EBITDA is higher than VIP. But you need to note that VIP is a bigger player in revenue terms. On valuations, both the listed luggage players are trading at similar PEs. A quick check on the shareholding pattern suggests that institutions are losing their patience. Both foreign as well as domestic institutions have reduced their stake in the company. Well, let's get a sense about how business is shaping up with Ms. Neetu Kashiramka. Well, as promised, we have got a very exclusive guest and an exclusive interview that's lined up with Ms. Neetu Kashiramka. Well, ma'am, thanks so much for joining in on Inside Out. There's a lot to discuss, so let's get straight to it.
Pleasure.
Well, before we get to the company dynamics, I wanted to ask you about the industry dynamics. There has been this much talk shift from the unorganized to the organized market. How much of that has taken place? And also, according to your estimates, what do you expect the industry to grow by?
Okay, so industry is expected to grow handsomely, close to 15%. Most of the reports are talking about it, and they are talking about this 15% growth for next 3 to 5 years. The thing is that India is in the growth story. It's 1 decade for India is what people are talking about.
Indeed.
And few industries which will do well. One of it is hospitality, and our industry comes under that. So I'm happy that I'm in an industry which is going to do well for the next few years. If I have to talk about this, unorganized to organized, pre-COVID this used to be a 60% unorganized and 40% organized. It's now moving the other way.
Okay.
And today the journey has come up to 55% now is organized and 45 is unorganized. Now this has happened because of 2-3 things. One thing is that with the launch of hard luggage in a PP material,
okay,
we have been able to offer a product at quite reasonable price, and that's why now the difference between a product from unorganized to organized has shrunk. The second thing is that for the unorganized guys, the biggest supply chain was China. Post-COVID, that got disrupted. So because of these few reasons, I think the shift is happening. Also, more and more people, the aspiration values are going up. They need, to buy branded stuff. So because of those reasons, I think the shift is doing well, and I would say that it will continue till it becomes 60 in favor of organized.
Well, it's nothing like being at the right place at the right time, and it appears that the industry has got tailwinds,
right,
and y'all are going to participate in that. Last few quarters, maybe it's been lacking, but we'll get to about how you're going to go about business. I've done some dealer checks,
right,
and the brief understanding that I have is they have 3 big concerns. One is the supply concern, in terms of refills or in terms of material coming in on time, point number 1. Point number 2 is in terms of design, which I believe you're addressing. And point number 3, and I'm not very sure about that, is that there was a fire in your Bangladesh unit, and it seems to have disrupted supplies. Are supplies back on track now?
Okay, so let me first take the last question, because that's not something true. Because what had happened is fire in 1 out of 7 plants in Bangladesh. So actually soft luggage never got disrupted.
Right.
Today, if I have to see, there is again one more shift which has happened is hard luggage share of business versus soft luggage. Hard luggage is now 75% versus a soft luggage of 25, which was pre-COVID the other way. Okay, now with that big shift, I have no issues in catering to soft luggage, and I have enough capacity. In fact, as we speak, my Bangladesh plant is only running at 50% capacity.
Okay. So one of the points are out of the way. There's no concerns on the supply of soft luggage. Let's address the other two.
Okay. On the other two, one, let me take the supply chain first. On supply chain, yes, I understand we had a lot of issues for multiple reasons. One, the sudden shift from soft luggage to hard luggage. Now, in case of hard luggage, my capacity was completely done, and now I am looking at distributed manufacturing across various regions to cater to this supply chain issue, and therefore today my hard luggage supplies are much better than what it used to be earlier.
Right.
Some of the other issues were on the warehousing piece, that we are addressing by looking at outsourcing the model. We are not an expert to deal with warehousing, right? And there are various experts available.
Indeed.
Let us give this to somebody else. We are running on pilots currently at this point of time. Over a period of 6 to 9 months, we'll be outsourcing most of the pieces. And my fill rates have improved. If you talk to anybody now, starting November, the fill rates have started improving.
So 2 out of the 3 we have got knocked off. What about design?
Third one I am so excited about. The kind of designs you will see, like maybe visit our store in April, you yourself will see what we have done. So there are ample new design which are coming up. We have also added international designer to our portfolio, and he has joined us in February.
You're saying you're going to be giving far better designs, but what about the price point?
So the good part is that VIP has 4 brands in its portfolio for luggage. We have lower end Aristocrat, then we have Skybag, then VIP, and then Carlton. So with all these 4 brands in our portfolio, I'm able to cater to all kind of consumers.
Right.
And I would say for a better product, somebody will definitely pay a little more. And from that point of view, I think competition wise, we'll be at par with competition on the pricing.
Indeed. We'll talk about how you're going to be penetrating into the market, because the market share has been a concern. But I also wanted to ask you about your capacity. Since you briefly spoke about that, what is the current capacity utilization levels in both the segments, in hard as well as soft, if you want to put a number to that? And are there capacity addition plans that you have?
Yes, definitely. So for soft luggage today, we have no concern. I told you, our capacity utilization is only 50%.
And you're sitting on some inventory as well.
Yes, we are sitting on huge inventories, and therefore what I'm looking at is expanding my capacities for hard luggage.
Okay.
Also, last year to this year, my hard luggage capacity have already doubled. And from here, I'm going to increase it by 50% more. And this will be distributed manufacturing, which will be low capex model.
So asset-light model is what you're looking at. All right. And this will suffice you for the next couple of years at least?
It should suffice me for next 2 years.
Well, Ms. Neetu, you have said that the market is expected to grow in mid-teens. The problem is in the last few quarters, the market has been growing, but VIP hasn't really kept up. Where do you see this number headed, say in the next 12 months and post that as well?
So definitely we have done quite a lot of back-end work, and I believe from here on I should first get to 40.
Okay.
And then maybe 43, between 43 to 45. Okay. Very difficult to put a number what I will do in next 3 to 5 years, but my aspiration would be to reach 45.
And also if you could give us timelines, because going to this number of around 40, 45%, they will require a timeline as well, because the market believes that as of now, VIP has been trailing the market. Do you think you can grow at pace with the market and then outgrow the market?
Yes, so I definitely believe that we have to grow 2 to 3% more than the market growth, and that's what I will be doing. In fact, my success will start from Q4. So Q4 we'll be doing a double-digit growth after a long time. It's like after 4 quarters.
Okay.
So I think that's where I would say that the confidence should come back.
Besides that, e-commerce, you're a bit of a slow starter out there.
Yes.
But gradually you have started upping the tempo. And if I looked at the last quarter's numbers, it's close to around 21% of your total mix.
True.
Where do you see e-commerce as a percentage of your revenues headed?
So we started with 6% pre-COVID, then it moved to 10. Today it's around 20 if I have to see for 9 months. And I believe that it will settle down around 25%.
Well, grabbing market share, growing e-commerce, everything comes at a cost.
Yes.
So a couple of questions on the cost parameter. One is advertising cost. What has it been traditionally? Where do you see that number headed? And also, if you could tell us, you've hired BCG and they are giving you some professional services. By when do we see all of this, get into the price? By which quarter will it get totally exhausted?
So, BCG project is almost at the fag end. By March, their services are ending.
Okay.
And therefore, Q4 will only have the cost now. So, next year, first quarter, it will have no BCG cost, and therefore, that itself will give us some margin improvement.
Advertising costs?
Advertising, it's around 7%. It will remain there. However, we will maybe spend right now. So, spend where it is needed, and same cost, but better utilization of assets, I would say better visibility it will create.
Well, in the near term, it's going to be a toss-up then, because you're going to be pushing through volumes, but margins could be lacking.
Yes.
By when do you see a margin improvement then?
You will start seeing it from Q1. So, my first aim is in FY25, I should reach around 14%, which used to be our margin earlier.
Okay.
And then journey to 18 will take maybe 2 to 3 years.
2 to 3 years, all right. But in FY25, you're telling us that 14% is what you're going to be looking at.
Yes.
The other brand is Carlton, and the sense I get in this conversation is premiumization is something that you want to focus on. As a percentage or as an absolute number of your total business, how much does this Carlton brand contribute? And where do you see this number headed?
Okay, so today it's around 4 to 5%. In absolute term, it's 140 crores. And my aspiration is to take it to 500 in next 3 years.
Okay.
And a lot of work has happened around it, especially on the product features. So till today, my Carlton highest seller is at 10,000. Going forward, I am taking it to 18,000.
Okay.
And going forward means by April or May, we have products ranging up to 18,000 rupees a cabin size luggage.
A quick follow-up question with regard to this Carlton brand is its premiumization. So in the near term, does it give you better margins?
Yes, definitely. So the gross margin wise, it's highest amongst all.
Okay.
If I have to look at company average wise also, it's 5 to 6% better than the company averages.
Okay, so this scaling up obviously will help the margin picture. And
Yes.
since you briefly spoke about gross margins, the problem for the stock market is that gross margins improved.
Yes.
But bulk of that is being plowed into growing e-commerce, spending more on advertising, basically pulling people towards the product. So what is the gross margin number you're looking at? Because input costs has cooled off.
Yeah, so 53 to 55 is the gross margin which sustainably I should do for next maybe few years.
Okay.
And EBITDA margins we were not seeing, I would say for 2 reasons. One, yes, more spend on e-commerce, and the second one is the warehousing cost, because my warehousing cost is actually higher than the industry.
Okay.
With these 2 improvements, my margin expansion will happen.
Okay. So this market will take all these comments that you're talking about, in terms of growth, in terms of market share, premiumization, as well as on margins. But the problem is, the market says that there's been too much of a shuffle and maybe attrition is a bit of an issue. You were always been talking about this team, your team that you want in place, and then you're going to show results. Has the
Yes.
team come into place?
Yes, it has, and a lot of the attrition at the senior level actually is a planned attrition. And today 60% of my team is new, either new person or a new role. And from there, I think I'm all set to go. And I am very, very hopeful that with my new team coming in, I should be able to perform better.
In in an industry like this, which is growing so well, how do you retain your, this new team that you've put in place as well?
I have offered a ESAR program for them, and not only for them. So I have offered it to level 2 also. So what it means is, earlier it was only for 12 people, now it has extended to 50 people. So now all these 50 people together will make this happen, and that's why this ESAR program I think they should become millionaires in some time.
The market wants 2 numbers. One is your revenue growth. You've already given us the market share.
Yes.
And margins, you told us for FY25 will be in that vicinity of around 14% before it scales up in the next 3 years.
Correct.
So in FY25, on the base that you deliver of FY24, what kind of revenue growth can you guide the street for?
I can say that we should do 2 to 3% better than industry growths. And industry is expected, we already spoke around 15%.
So 18% growth is what I'm going to be holding you at?
2 to 3% better than industry growth, because 15 is an estimation by various agencies. Now, whether that 15 holds 15, if it becomes 18, yes, add 2-3%. If it becomes 12, add 2-3%.
Okay, so double-digit growth with margins at 14% and gross margins at more than 50%.
Yes.
Well, Ms. Neetu, what kind of feedback have you got on ground? Whether it's with regard to your institutional investors, or even I believe you've been going and reaching out to various dealerships. So what's the feedback you've got?
Okay, so I would say that investors definitely are unhappy because now it's 3 to 4 quarters of underperformance. But I can only assure them that last 6 months, a lot of work has happened. I would like to tell you that I visited 20 markets in my first 45 days of becoming an MD. And I realized that the brand recall of VIP is so high. If we do right things, it will definitely convert. I observe that a customer is giving us a chance. It's we who are not taking it or grabbing it. And now I'm all here to grab it. I've already talked about a lot of products, a lot of innovative ideas. I think that will help me to grab the customer. And I can assure you that whatever I have said, which is better than industry growth, margin moving from today to 14 to 18, I think we are all there.
Okay.
It might take 1 or 2 more quarters, but it will happen, is what I can surely confirm.
Okay, the other rumor in the market is that the Piramils could be looking at selling their stake. And Miss Piramil as well, on one of the calls, she said, may not be today, may not be tomorrow, but at some point of time, maybe they're looking at selling out. Have you heard anything on that?
So it might happen, but it's maybe 3 to 5 years away because it's for the succession planning, which he has always been saying. But today it's not, and it is clearly visible because he has started buying from the market. So why will he buy if he has to sell?
Two-part question on that then. Was an offer given to the promoter entity in the last few months? Because that was the market rumor, that maybe there was an offer that came in, point number one. And was the size of the check not good enough?
I have not heard about any offer having come. I think at this point of time, he's quite confident that I should be able to turn around this business in next 2 to 3 years. And if at all he wants to sell, he will see after that. Nothing before that.
And also you mentioned a very important thing, that in the last couple of months, he went ahead and he bought some shares from the open market. Is he a buyer at current levels? What is his indications? Because I think he bought closer to around 600 rupees. The stock price is a little below that.
Yes. So see, he doesn't have any other business. So whenever he has some liquidity, he will buy. And that's what he will do. He keep buying at 650 also. As and when he has some liquidity, he will keep buying.
But he hasn't given you a target promoter stake that they want to hold?
No, because see, liquidity is something which he has to manage. I have to give dividend for him to buy more. So I should do well for giving dividend. So I think it's a vicious circle. If I do well, I give him more dividend and then he can buy more.
Well, it's been a pleasure hosting you on the show.
Thank you.
Thank you so much, for joining in on CNBC-TV18.
Pleasure is mine.
All right, that was a deep dive into VIP industries, but time to slip into a short break. We'll come back with another interesting stock. Linde India is in the spotlight on the other side.